is Nirav. And before we actually begin with the actual content, what I'm going to do is test the audio settings at my end. And if you are here live, you can also let me know by typing in the live chat section. Let's see how it's going on at this point in time. It looks like I'm doing well audio wise. Screen share seems to be working. In that case, let's get started with the regular disclaimer on screen. So guys, here's the disclaimer on screen, basically suggesting all content presented here is for educational purposes. We are not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, loss, or loss of profit. Rest of the stuff you can, as always, read by pausing the stream. So with the legalities out of the way, now let's head over and let me give you a very quick 1 second here before we get started with that. So let's get done with the quick introduction, guys. My name is Nirav. I'm the admin and owner of 50i's market analysis YouTube channel, as well as 50is.com website, where I've been conducting these webinars called Trading Opportunities webinars. And so far, we have conducted 103 of these webinars. And within these 103 webinars, which you can always access by heading to our YouTube channel, 50 years market analysis, clicking on the live section, because all of these webinars are conducted live during market hours. You can just scroll down and check any of these. All of these are time stamped, right? And in the 103 webinars so far, we have captured 200 and once again, we have captured 231 trades so far, including the 4 trades which were discussed during the live broadcast last week or last Friday, right? So this is our track record so far, averaging about 2 clear trade setups per webinar. And these are all free, all publicly broadcasted live on YouTube as well as our LinkedIn page, right? So that's for the current series, current webinar series, Trading Opportunities. Other of my work, you can just check out my book for intermediate to advanced traders, Think with the Markets. It's available on Amazon's Kindle edition, so you will get instant access. You just have to click buy, and they will electronically provide you the copy, right? And I also have a track record of all the past work I have done, videos, webinars since 2016. I have an exceptionally high record, 83%, 30.34 on 2016, 2017, 87.5, 2018, 84.61. 2019 84.88, 88.52, and 2021 82.22. And these are the 6 years beating all industry standards. The accuracy has remained higher than 80%. Since then, we have been conducting these trading opportunities webinars, and as you already saw, we have captured 231 trades so far, right? So this is all live, public, and it's all checkable. All these track record pages or sheets, as I should call them, they are all having the analysis written out. What was I saying in the analysis, right? What was the instrument name? What was the price of the instrument when I did the analysis? Date, as well as the link for checking the thing yourselves. So you can just click on it, check the YouTube video yourselves, right? What happened is also written here. So this is all above industry standards. My work has been publicly available for many years, as you can see here, right? And if you want to learn more of it and want to learn the methodology which I use, which is advanced Elliott Wave, I have done 8+ years of research on it, private research, then you are going to have to check out the book as well as the video course, which is if you go through the website, there is a 5% discount currently on it. It has about 1500 plus students, 4.9 rating. I think the top rated instructor on the platform which this is hosted. The platform is also public, so all reviews, etc., you can check after you go through this link. You will be redirected to the platform, right? So this is the video course, and as I said, you can check it. Now, before we proceed, I will like to take a few moments. We will be launching a new batch for training programmability, which is personal classes only for students who are in my video course. They can apply. We do very small batches of 2 to 3 people. So if you are one of the students who has gone through the video course and would like to become more serious about learning Elliott Wave and go through the advanced strategies for live market analysis and trading, which I have developed over the years, then you can fill out this form by heading to 50s.com/trading-program-LT, right? And lastly, before starting the batch, we will also be doing a Profits Revealed webinar. I'll be showing off the 6 months of track record with live broker statements and all track records, trade history, etc., live in front of you guys. We have made about 63.7% the last time I checked the P&L, and I'll show the instruments which I trade, how frequently I trade them, long, short side, etc. It will be a complete insight into the private stuff which is not revealed to the public. So this webinar is only available for registrants. So you will have to register yourselves before becoming a part of this webinar, and it will be only available for what you call live access. That is, we do not keep a copy of this. So if you want to check out all this information, then you will have to actually live attend this after registering it, right? Process is simple. You head on to 50s.com/webinar registration. You fill in the form. The date for the webinar is 9th March, and the time is 8:30 p.m. IST, which will be about 3 p.m. GMT, right? So you can just head over there, fill the forms. You will get a revert email to your registered email ID, which you used here for entering the webinar, and then you can join on the set time, right? So that will be the procedure. And as I said, this will be an important thing. It will be only live and completely insightful. I highly suggest you become a part of it, right? That's about that. And let's now head over to our actual content, right? One last thing here, we will, as always, follow this process. We'll go over the charts of Euro USD, crude oil, gold, S&P's 500, and eventually we will cover the last chart, which is of Nifty 50, followed by Bitcoin. Right. So this will be our sequence. So with that being said, let's now head over to our charts. Give me a quick minute. Let me check one more thing here before we actually show off the charts. So yeah, let's get started in that case. If you are live here, you can always say hi or hello. That will also confirm that our audio is working. Well, I'll personally check it one more time before actually going live here. Yes, it is working fine. So here's our first chart on screen. Let's load the chart of Euro USD. Now, this is a trade I was in. I'll discuss the trade as well. Let me see where's the Slack group. It is. And even before discussing all that trade and stuff, let's just first quickly check what I was saying in the last webinar when we were discussing the chart of Euro USD by heading over and checking the recording for the last webinar over here. This is the recording 103rd Trading Opportunities webinar, as you can see over here. Let's check what was being said in Euro. Let me just play the webinar here, mute the sound. So what I was saying in the last webinar was that this market is possibly going to give a correction here, as is represented by the in the price action in the yellow box. So we were expecting a possible zigzag correction here or something of the sort. And the main idea I had was to go long for this next level, which follows up. Right now, let's see the actual chart and see what really happened in the market. So last discussion was done on 23rd of February, which would be somewhere around here. We were discussing the markets last time. What happened was the market did not give a zigzag. Rather, it looks like it is progressing either as a flat or maybe even a complex structure, right? And I was able to book some profits in it. Actually exited the longs somewhere here, I think. And where is the euro posting? Let me see. So here's the exit. This was, by the way, the setup was whole thing was discussed last time. So book profits on longs considering possibility of wave B continuation. So at that point in time, the market was just it was estimated that this will become a zigzag. That was estimated at that time. So I covered my longs in profits already. Now keep in mind that is the main theme we were following at that point in time. Of course, later on, as more things became clear, we came to the conclusion that it's most likely becoming a flat correction, as you can see with the posts here, right? So this was a long. It was discussed last time, and I exited with partial profits here. This was not the biggest trade in the week. The big profits were in crude oil, which we'll discuss next. Now, what is going on here at this point in time is more or less the same, which we discussed last time. Once this wave C is complete, we will still be looking for long trades here, and it can be considered like this, that we have this as the first leg up. This is the correction. This is the whole thing can be a zigzag, diagonal structure, right? So A can be here, B can be here, and this could whole thing be a diagonal here. Could also be counted the other way, which I had marked on the chart. Maybe this is the B and the C is still continuing. This generally does suggest a deeper wave C, right? So these are the two variations which we are having in mind right now. Now, both of them, as I said, are pointing to long trades. What I would like is an alert, better alert, not that high up. Idea remains the same. I can start building some positions here as well, minor longs, but I currently do not have them. I want to see a completion of this C structure, right? One more let down leg possibly, right? So once that is there, then I'll probably start building up longs. And the second thing which I'm thinking is if I do not want to get long here, then once these alerts are taken out, then I'll start planning longs. Same idea. Let's say it goes for a zigzag, sorry, a diagonal. Then above this, we expect the market to go much higher, at least take out this high. So this will be the small margin. And then if it goes up, then profit margin increases. So simple enough setup. Wait for the wave B completion, look for longs for wave C. Nothing to add here. I currently do not have a position on Euro USD. Right. That's about that for Euro USD. Next thing we want to discuss is crude oil, right? So crude oil, let's load up the chart here. By the way, if you guys are live in the chat, you can definitely post your questions or queries. 1 second. Let me see if this live. Okay, so here is the chart of crude oil on screen. Okay, so first of all, let's discuss what was being said about crude oil in the last webinar. I mean, that was the title of the last webinar. So there was a crude oil set to rally. That was the title of the webinar. And let's see the exact things which were pointed out during the webinar on CL chart somewhere over here. Let's see. So that was the main theme we were discussing on the CL chart, crude oil, WTI crude oil, West Texas Intermediate crude oil. The idea was that we were expecting a strong rally from this counter. Wave 2 may still be continuing, and the suggested reversal levels, the deep reversal levels were returning out here 75 to 74.2. And even before that, we were expecting a reversal around 75.94. Let's just say 76. So once that reversal was complete, we would be interested in adding more longs. I was long at that point in time. I've been holding longs on crude oil for quite some time now. Now let's quickly head over and see what really happened in the market later on. So here's the actual chart of CL. Our discussion, as I said, was on 23rd of February, somewhere here. We were expecting correction at least till 76. The market did go to 76.11 roughly. Reverse from there, I added more longs and exited part of it over here. Somewhere here, exit levels we can also check. Let me see. Yes, booked profits on the new longs which I had added. I booked profits around, let's see, actually at the high 79.618. So I was able to actually capture the peak of this thing. It was posted live, as you can see. Timestamps UTC plus 530. Keep in mind the timestamp posted is in plus 530. So this was the time it was originally posted, and I generally post it right after closing the trade. So 1 or 2 second delay maybe, or a little bit more. So this was the trade I closed in with the huge profits on this counter. And again, this trade was all discussed live market in front of you guys. Right. I am still holding some longs here with the stop loss around somewhere 76 point something. I think 76.2. Basically, this low is what I'm holding the stop as. And that's like, a small position I like to keep on just to see if it really takes off, if the analysis really plays out. I do not want to be left behind. And that's also the original position which I've been holding for a long time. So that's also running in big profits at this point. And let's see where it goes. I'll just keep trailing it as the market goes up. And at one point or another, the trail will hit or the profit will be substantial enough for me to exit. So as far as the accounts are concerned, the main theme remains the same. We are still seeing one more thing here. What about the audience participation? I'm seeing there are quite a few people online, but the live chat is still empty. And the feed seems to be working fine. So guys, it's a live webinar, so I'll appreciate some participation here. That's what's the point of doing a live thing anyways. So with that being said, what I was saying was that in CL, the theme is still the same. We are still expecting the count to be like this. Let's say wave A up here, the B down here, and then the C will follow. Basically, a zigzag sort of a correction here. Once the A is complete and the B is complete, we expect a C wave, which shall take out the last high. Now, in this case, the wave A high was already breached, so this high becomes the high which should be taken out. As you can see, it's already been taken out. Now, the idea I have in mind is that this market is heading as an impulse for wave C, an impulse in wave C, that is this structure. If I draw with the different color, will look like this. So this wave C, this whole wave C will look like this, as pointed out here. And this structure is called either an impulse or diagonal, one wave up, second wave down, third up, fourth down, and fifth up. So that's generally what the structure looks like on the real chart. And if I were to see it on the real chart, that means we probably are in the strongest of the strongest movement, right? That's the expectation. Now that's our main theme. If this is being followed, then all well and good. The market will just go and take out these levels. 81 also can be taken out very easily, and I can just project the wave 3. We want to check the 1:1. It's coming around at 83.5, let's say. And then higher levels, anything 85, 86, 88. 161.8 is the most or the highest level which you expect in this rally if it continues. So anything is possible. 83, 50 to 88 is all possible, right? If this market continues with this rally. Second theme, as I just mentioned in the rough area, the theme is A, B, and C. Now, as you already know, the wave C has to just take out the high of A. In this case, the last high, which was this. So this has already been taken out. So there comes the second possibility. The second possibility is basically suggesting that this market has done its bare minimum up move, right? Probably it's like a diagonal here. Count it multiple ways or whatever you want to count it as. But if it is the case that it's a diagonal, then this could be marked as a completion of the whole thing. And then a strong down move can follow. I do not have any evidence for it, and I'm not going to trade it just yet. Only case I'll consider this possibility is if I see a strong leg down, and even then I'll be a little bit conservative and only look to short below 76.66, right? So that's just the secondary low probability scenario here, right? I'm not going to consider it as of yet. It's just it's just something I had to put forward for risk management purposes, right? These are the two main themes on crude oil which we'll be tracking in this week. And now let's head over to our next chart, which will be the chart of gold. What's the matter, guys? I can still see live participation increasing. Is chat not visible to me, or this is new audience? What's going on? Why is there no hi, hello, or any question? As I've said many times, these webinars are generally promoted by the YouTube algorithm basis of engagement. Engagement is counted in the terms of likes, chat, comments, and comments after the live broadcast is over. So that's one of the reasons why I'll be asking you guys for participation. Right? But if there is no participation, I'll be as quick as I can. I do not have to explain every second or third possibility. I can just go with the main theme. Right? Your participation equals my interest, basically. So now let's head over to our next chart of gold. And gold also had a minor long trade, which we discussed in the last webinar, which has played out actually, and we will look at it right now with the current count on current, not current, the last count on screen here, around somewhere here we were discussing gold. And this was the setup. You can check the whole thing by visiting the last webinar 103. What you can check is the alert which, or the theme which we discussed, was that above this alert, let me just play the thing. Above 2033, I was looking for a short term long opportunity, intraday or scalp kind of opportunity, right? And these were the two main themes, H1 and S2. H1 was suggesting small leg up followed by a down move. S2 was suggesting straight off down move. So H1 has actually played out, and we can actually check that by actually visiting the real chart of gold. 2033 is the level over here. Let me mark it for you. There it is. Was taken out, and the market has gone up from there. So the short term long trade did actually play out, right? I don't think this theme is being followed here anyways. I'll check that later. Anyways, so yeah, what I was saying was that the main theme on gold has played out. The short term long opportunity has worked out. Now what is really happening is, I'll discuss the count wise perspective. Don't need this. The count wise perspective is this. Mm-hmm. Yeah. So the converse perspective are actually two. One is that we are assuming that this is going to perform like an A up, B down, and C up. So this will be your A up, this will be your B down, this will be your C up. Simple enough. If that is the case, then we expect that this market can even take out the high of 2088. That is one of the two perspectives. Now that is not a requirement, because actually what we do have here is a possible slight correction. So what I'll do is I'll just explain it on the rough right hand side first before proceeding with the analysis. In a flat correction, we expect the market to go like this. So this is what we call the wave 1 here. Correction in A, wave up, B down, and then C up. Now this B down is already complete here. Now the thing is, with C, we do not really know where it's going to stop. It can stop midway, near the end of the middle of the range, near the end of the range. So basically it can stop here, it can stop here, it can stop here. We don't really have a proper idea, and that's why I'm saying that whenever the C is complete, then we can expect the new downside movement to come in, right? So that's the theme here. That's why you can see I have two alerts placed on the downside, none on the upside. What I'll do is I would like to know if it goes near the top end of the range, but that's not a trade alert. That's just an alert for me to know that now I can start planning for longs, right? So what I'll do is I'll just place the greater than alert, right? And the theme remains the same. We wait for the completion of the C wave, and once this is complete, then we will look for short selling opportunities. And I do seem to have some participation here from Martin. Hello, Martin. I've got your thing with the markets. Oh, that's nice to know, Martin, that you are in the book and the course as well. Like, you stay with these webinars, follow the books and everything. You'll be good to go in a decent amount of time. I wouldn't say Elliott Wave is easy. I've been struggling with Elliott Wave, but your webinars have helped in getting into trades and helping my accuracy. That's extremely good to know, Martin. Thank you for coming in live and telling our subscribers how you are doing. So, continuing on with our analysis, as I was saying, on gold, the theme remains that once this wave C is complete, then we expect that the market will give a downward movement and we wait for this leg, right? When are we wrong? We are wrong if we see a move higher than 2086, sustaining above 2086. Now, keep in mind, wave C, which I represented in this right rough end area, can actually go higher than this wave. That's definitely doable, possible, completely 100%. Right now, because that is possible, that's why I'm saying I'm not interested in longs right away. I just want to know about them. But it can do something like this as well. It can go higher than this A high and then fall. So what will be important to note if it goes higher than A is that is the market sustaining? Is it forming a correction over here, like going above it, small correction, and then going above it again? Then it becomes a kind of a problem situation here. Then that means this count is probably wrong and this market is actually going up, right? So now, right now, we don't have any evidence for it, and it is not our main count either. So I'm going to not bother myself with it. Right now, the possibilities are this wave C is complete or continuing, possibly complete as a diagonal, which is not looking very. It is actually clear enough, but I cannot relegate the other possibility that this is just impulse heading up. This will be the 3, the 4, and the 5, right? Both possibilities exist. Just wait and watch which one plays out, and we'll be looking at it again from a shorting perspective below 2025, right? Nothing to add here, guys, and just move on to our next chart of S&P's 500, which is moving as per our analysis. Actually, not much to discuss on it because it is sort of following the last webinar's themes. But what I'll do is just check and show you the discussion from the last webinar before proceeding. Our current webinar here is on screen, the last webinar's discussion. Let's see at 26:50, right? So this was the discussion done in the last webinar. I'll just make it full screen. The analysis was pretty simple, straightforward. We were expecting that this market will either go and give a correction and then go up, or it can also go straight up, right? That was the whole theme in the last webinar. You can check the whole discussion. It was quite 4 or 5 minutes long or something by going to our YouTube page, live section in 50 as market analysis channel and selecting 103 webinar number. All are time stamped. Now, getting to the actual discussion on chart here, we were discussing the last time around somewhere here, right? Since then, the market has gone a little bit lower, so that's why I said it is following the counts, right? And I'm still holding the longs, by the way. I've been long since the last webinar. I think I may have discussed it if I am, but I think it is being held for quite some time, most likely since the last webinar. So even before the last webinar, I think. Anyway, so it is still in profits, but I think I'll wait for it to do something like this. That will be the main theme, right? That's what we have been waiting for quite some time now. So count wise, as I said, things remain the same. We still expect that this market is giving us a 1 up and 2 down here and a lower degree one, like a dot 1, dot 2. Let me remove this. And then up for a 1, 2, 3, 4, 5. Or as I said, you can count it multiple ways. You can also say that this 2 is still continuing like this. And so on and so forth. There are 2, 3 ways. But long story short, in either cases, we are expecting a strong leg up from here. So this leg is awaited. That will be our dot 3. Right. As I said, there are 2, 3 counts. All are supposedly pointing us in the other direction. Only time things are wrong or not as expected is if we start to see something below 5,000. Actually, below 5,020 something, it will be a problematic situation, right? So as long as that is not done, I'm not really interested in discussing bearish counts. I may have discussed them in the last or maybe last webinar. I don't quite recall, but that would be the main theme. And as I said, nothing much to add on this one. More or less the same. Now moving on with our discussions, let's now head over to the chart of Nifty. And guys, if you are enjoying the content presented here, the webinars and everything, it takes a lot of time, then I'll request that you kindly show your appreciation by hitting the like button on YouTube. That will definitely help us a lot. But more importantly, leaving a comment, and even more importantly, sharing the content with at least 5 of your contacts. More reach, more engagement, more motivation, and more of this content, right? So kindly show your appreciation by doing the same, right? And lastly, before heading over to the Nifty chart, I did make an announcement that I'll be covering weekly updates. Like within the week, I'll try to make some updates as and when required. And I had some interesting positions which I should have shared, but I've been traveling this week. I'm not in my I'm in my first office, so I had to travel a little bit from here and there, and had some stuff to sort here. So I literally had no time, so could not do it. And we'll try to do it next week. And once we get started, then you can expect continuation. We'll at least cover before the expiries, if nothing else. So as I said, I'll try my best to cover it from the coming week. But as I said, I've been traveling a little bit, so yes, a little bit of waiting may be there on your part, guys. Those of you who have interested have already shown your interest in the last two webinars. And if you have not, always use the comment section and let me know if you are waiting for the Nifty plus Bank Nifty during the week updates, right? Just let me know in the comments after this webinar is complete. We'll obviously consider doing more of them if I get a lot of request for it, right? Presently, at least one during the expiry will be my target. So before discussing the over chart of Nifty, what I would like to do is check out what was being said in the last webinar, right? So first of all, let's head over with the chart of the last webinar. This is the live stream chart, 103rd webinar. And let's go to the Nifty's discussion. It was discussed somewhere over here. Very clearly, we were expecting some downward movement. It was expected to stop around 22,040 levels, roughly speaking. But in reality, we had a lot deeper movement, which, by the way, I was able to capture in live markets and was posted in my Slack, right? Again, I wanted to do an update for it, but then I had to travel, so that was not possible. So, anyways, that was the expectation, downward movement and then upward movement. However, what we did get was downward movement and then a little too much more than what we expected originally. So here's the actual chart with my updated counts. Last discussion was somewhere here. Let's see, over here, right? And we were expecting the movement to stop somewhere here, maybe a little bit lower as well, but that was not on the cards. Now, so what has really happened is, with the updated counts, we can see that since this point of reference, we have considered this as the A and the B, and this leg is considered as the C. So previously, the count was suggesting that we had the B here, right, and the C here. So basis on that, we were expecting the market to go up and up, right? However, what really happened is Jill is saying thank you for the updates. You are very welcome, Jill. However, what really happened was, one second, let me just move it a little bit up. That the B was in continuation. That was the whole theme, right? And basis of that, since we are now expecting C here, the main theme becomes more upside, right? That's our hypothesis one. From a swing perspective, this presents a very strong opportunity. What I'm expecting is that if the wave C is complete here, keep in mind, let's just call this the H1 or hypothesis one. So if hypothesis one is playing out, then we are expecting this market to give a correction. This one basically, main correction, and then head up strongly, right? That's the main theme, which is suggesting swing longs, because if discount is being played out, then we can start building up longs from here itself, the current price itself, right? And we can add more here as it corrects. Why is it important? Because not always the market will give you a correction. Sometimes what will happen is the whole thing will just gap up here, go up, then give you that correction which we were talking about, and then head over. And that gap up can be quite substantial at times. That's just a thing that happens during live markets. Nothing substantially new I'm discussing here. Right. So that's our hypothesis one. We are just expecting minor correction, which will be followed by a strong up leg. Let's just use this as our denomination methodology for hypothesis one. Second thing which I'm thinking over here that might be possible is that this wave B can give a minor up leg, but the wave C can be deeper. Now, why do I think this is worthy of consideration is, let me just represent that in a separate color. Let's call this as H2 or hypothesis 2. Now, hypothesis 2 is suggesting that this B is still working. It's not complete here. It's still going up. And whenever it's complete, a little bit up, we have actually some resistance levels set out 22,500 and one is 22,360 something, which is already hit literally, right? So going on 22,500 will be the next level. Let's just quickly mark it, remove everything, right? So what is happening here is that once this market does hit 22,500, we can expect a deeper correction, right? And this deeper correction will be to wash out other people who have weak hands. Basically, market does it all the time. It takes out the weak hand, and the weak hands position is taken out by the professionals. And once the professionals have their inventories filled, their trucks loaded, whatever terms you would use, then they let it rally, right? So that is another consideration you have to keep in mind. 22,500 will be a substantial level to look out for this thing. The other level is whatever the market's current high is, the other resistance level, 22,360, I think, something. So it can do that from here. A deeper correction from here is also possible before taking off the rally, right? So that's why I said this market is extremely good opportunity for swing longs, right? Intraday, of course, requires more analysis. And I mean, if I were to discuss intraday, then the discussion can go on for 30, 40 minutes or maybe more just on this chart. So that goes beyond the scope of these discussions with public webinars. But swing perspective, this is an exceptionally strong swing buying opportunity. I'll be exploring more of it during the week. We'll get some certain points in time where it will be even less riskier, right? If we get a pullback, then that's one of those obvious cases. But even on the upside, the gap up can also present one of those opportunities. Again, that remains to be seen and kind of goes beyond this discussion scope. So that's about it for my scenario on Nifty. Immediate resistance already here, followed by 22,500. Right, one is minor pullback. Let me change the color. Can't do it. So anyways, one is minor pullback followed by upward movement, and another is upward movement followed by a deeper pullback. So both are suggesting upside, but you have to be cautious considering the deeper pullback can be something not everybody can hold on to. If you guys have any doubts on this one, you can just type that in the comment section kindly, and we'll then head over to our last chart of Bitcoin, I think, which has created quite a buzz. Martin asking or saying, how come you are giving so much value for free? It doesn't make sense. Thank you for a kind comment, Martin. We have to do what we have to do, right? I have to analyze the markets every week or actually every day. So why not share one of those days with you guys? It helps me keep other businesses running. It's an isolated profession of trading. You just sit in a room. Other businesses involving personal classes, for which we'll be starting the next batch, that requires some marketing. So instead of doing any separate marketing, I just share my analysis, right? What better marketing than showing off your own skills? So with that being said, now let's head over to our last chart, which is Bitcoin, and has hit a psychological level. And that was also actually something we discussed in the last webinar. But let's have a quick look by actually going to the chart of Bitcoin. So let's first load up the live stream. Basically, last live stream I want to load up here on screen right now. Where's that gone? Yes, so here's the last live stream on our trading opportunities webinar. This was done, as you already know, last week or last Friday. So we were discussing Bitcoin, and let's just go and check the actual timestamp of BTC. So here is the discussion of Bitcoin, and let me remove everything I have written right now on screen. So here's the discussion on Bitcoin. What we were expecting was that this market is bound for an up move. As you can see, we were expecting two upward movements. One is wave 3, one is wave 5. So it's going to rain here now. I don't know if you can hear the clouds, but I had plans to go out. I think they might get cancelled. Anyways, so what I was discussing was that we are expecting two legs up, and I did say I think very clearly here that if there are two expectations of or expectation of two legs up, then at least we'll get one, right? So what we had here was correction levels 50447, another is 48900. Now both of these were the levels where this market could reverse, but what indeed happened was, let's head over to the actual chart and see. It's the chart of BTC. What indeed happened was the market never literally touched anything. It sort of went till the first level, 50420, whatever it is. Never really actually touched it. As you can see, I still have to correct this for here. So it never really gave us a very clear idea. I mean, it was clear enough when it broke the high, but not clear enough for those who were expecting a deeper pullback and only then buying. So that's just one thing the market does when it has to give us long move. Either it will be too deep to shake out weekends, or it will not be deep enough for anybody to get in. Right? Just a common theme. I've been observing it for so many years on thousands of charts, literally on all time frames. So as I was saying, once this wave 4 is complete, we were expecting an upward movement. This was a long-term resistance. Red line already marked, and as you can see, this market is literally, I'll just draw it over here, the yellow. Market has literally gone and taken a resistance at it. First spike, we are on the 4-hour chart, by the way. Then tried to close above it. Next candle closed below it. Next candle closed above it. Sustained for two candles, then below. So it is still acting as a resistance zone, I should say, not a level. 62,000, very strong resistance level. And this is a resistance level which I predicted long before during the time. I remember I had a student who had some Bitcoins. He was a Bitcoin millionaire, by the way, and he was holding them for quite some time. I told him very clearly that this rally which was going on here will stop around 62,000 level. I did give him some very precise levels, and those levels literally held. The market after that has given such a big counter move, down move, whatever, right? So this was not new. This is the all lifetime high, a psychological level. There are other reasons why this level is important, but I'm not going to discuss that. Just telling you the story which I remember from 2021 actually, right? And what really happened was the person which I recommended this resistance level, he did not book the whole profits, only partial. And then when the market did break lower, then he booked the exited the remaining positions. Quite a shame because it lost 50% of the value almost. But it is what it is. So, anyways, what we are seeing right now is a strong impulsive structure possibly in play. Definitely does not look like a correction at this point in time. And I think I had the charts for it somewhere. And this is, we are considering this as our POR or point of reference. And we are expecting the market is giving us wave one here. Actually, I should refer to our chart. One second, let me see. One thing very clearly. Crypto. Give me a quick second here. I have the analysis for it on some other tab. What I want to do is just check which one it is. So long-term wise, this is what the expectation is. If it is super bullish, this is just a super bullish count, by the way, guys. I'm not considering the other possibilities like correction here. So going in theme with what we are expecting that this market has multiple upward movements remaining. As you can see, three you can see right here on screen. But if I squeeze the chart, there are multiple more up legs remaining. So long story short, we can see a big substantial move in the upward direction. However, the current market is suggesting, let me remove this. Short term wise, the market is suggesting that we can expect a correction here for wave 4. This is important to note because this wave 4 correction can actually take this market lower to the levels of 58,700 followed by 55,520. Right. So since these levels are possible, it is also possible that this market, not possible, it is also expected that if this correction continues, we can see a market taking out the yellow trend line to the downside, this trend line to the downside. This one should actually change the color here. Orange trend line to the downside. Now, both of it, these things are possible, and the other possibility is that it just does not give any correction and just straight out blows through the upside, right? So now, since these two possibilities are actually counter to each other, that is, one is suggesting something, another is suggesting something completely different. What the proposed way I have of tackling this is that if we see a correction, we wait for its completion by counting the internal structure of this, right? Not something I can discuss at this point in time in detail. Quite will be quite a lengthy discussion and complex as well, not for beginners. Right. The second thing which I expect this market can be doing is not giving any correction at all of the deep nature, but straight off shooting up. Right. Now this one is simple enough, and this we can play by keeping an alert near the highs above 63,288. Basically, I should not give any level. I'm basically saying that if it goes on the daily chart near the highs or takes out the high, then we are expecting that this market can just shoot up from here. The idea in that case would be that this market has a series of impulses, for instance, one, two, and then a lower degree one, and then a further lower degree one, let's say a double dot, and then a three or maybe another lower degree one. So that's the kind of theme you see in a exceptionally strong market. And because it is looking exceptionally strong, we have to consider the possibility of a breakout. So long story short, a breakout trade is expected, right? You can take one near the highs, and this is the kind of trade you will have to trail the position in. You cannot just expect a target, although we have discussed some target levels. It is the kind of position I would suggest you trail it and let it run. If it's going to be ultra strong, you let it run, right? That being said, some upside target expectations we already have is I'll actually avoid discussing any targets. At this point, I remember there were two targets. Something was around 80,000 and the next one was literally precisely 90,000. I don't know which one here. Oh, there it is. 83,157 and 91,800. So discussion of targets is kind of pointless in a super bull market. It can just hit all of those and keep hitting further, 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 right? So if you are long, keep trailing. If you are not long, breakout trades. Again, with trailing stop losses, upside can be big. I have discussed both the limitation count or the limited upside count with the corrective possibility, and the second one is ultra bullish count. I have also discussed. With that being said, that's about it for our discussion. And if you guys are interested in joining our private webinar, as I said, and I think it is scrolling below the screen as well, that we'll be discussing with our broker statements and everything, how I was able to manage my account in the last 6 months with the whole insight and everything. Then you will have to join in the private webinar. It will only be live, no recording or anything of that sort. And register with the given below links. And those of you who are new can just go to 50hours.com/webinar registration. This is the page. Fill in this form and you will get an email for the joining, right? So that was all for this webinar, guys. Thank you for being a part till the end, and I'll see you in the next one. Make sure you share this content and hit the like if you haven't already. That's about it, guys. Bye and take care.